Thank you for tuning in and welcome back, team. In today's episode of Home Buying Tips, you'll learn about the top 10 home buying myths. Let's get to the heart of the matter and share the truth about the next 10 myths in this video. My name is Andrew Finney, your real estate geek. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you haven't already done so, please go ahead and subscribe to this channel now and like this video. Thank you. Okay, team, so let's talk about this. This is really exciting stuff because, you know, every single week I get reached out to by home buyers that are first-time home buyers, seasoned home buyers, people that are moving from out of state to buy a home, and these things keep coming up all the time. So I'm going to put to rest today, right now, the top 10 myths that I hear consistently, leading in with the first one. Now is not a good time to buy because the market is too high. So here we go. Real estate has appreciated a lot over the past few years. You know, right now making this video is 2018. So anybody that's going to be watching for this video 10 years from now will be able to use the lessons learned still from the myths of this video. Even when the market has appreciated, many home buyers might think that or believe that the market's going to come down, and they want to wait until the prices come down on their homes. Here's the thing, and this is just the truth. Please don't do that. You got to make sure that you're gauging the market correctly. While we can pinpoint peaks and valleys and the highs and the lows of the market about 8 to 9 months after they happen, or watch trends that lead up to a peak or a valley happen, then what happens is the market's still appreciating. Interest rates are still climbing. As market rates still appreciate, the home that you want to buy is becoming more and more expensive. So let's say that you waited like a couple years thinking that the market was going to come down. In the same time frame, that same $300,000 home appreciated by 20%. So if it appreciated by 20% on a $300,000 home, that means that same $300,000 home 2 years from now could be $360,000. And if you thought that it was going to give you a 10% correction, it might be another 1 to 2 years before you got a 10% correction. And at the same time, if you're following along with the math, it's still going to be more expensive than had you bought your home whenever you felt comfortable and confident to do so. If it feels right, if now is the time for you, I mean, it really comes down to this. The truth of buying a home is always the time to buy a house is when you're ready, when you're financially, emotionally, and physically ready to purchase a home. Life events like getting married, having children, or getting your first stable job usually are driving forces behind this. So when you're ready, that's when the time is to purchase your new home. If it feels right, it is right. Okay. The second myth is that you get huge tax savings, right? So here's the reality of this. You know, there are things like mortgage interest, property taxes, and mortgage insurance that you pay as a homeowner that might be tax deductible depending on the current legislative laws and depending on your state's codes and everything else too. I mean, the federal government's one thing, state and local governments are another. So you might be able to do that. However, if you don't itemize your deductions, you might be taking what's called a standard deduction. And in many cases, homeowners' deductions are less than that. So you got to be careful about this. And the best way to lay this to rest is actually chatting with a tax advisor or a tax accountant to review your circumstances as a homeowner to see how current legislative changes to the tax code affect you as a new homeowner. Make sure that you're chatting with a tax advisor to get the best information on that, okay? The third myth is that it's cheaper to rent than to own a home. It might look like that on the surface, and here's why. It might look at it on the surface if you look at only monthly cash flow going out towards the rent, right? And usually that might be true, but it's only going to be temporary. It's only going to be for maybe that next 6 to 12 months, or as long as you're renting that property, depending on if the landlord is increasing the rent every single year, as a lot of them start doing as home prices escalate, right? So rents overall will tend to rise over time, whereas if you have a fixed rate mortgage, your mortgage payment does not increase. So if you buy your home now, within just probably 2 to 3 years, your mortgage payment will be less than what you'd be spending on rent. So you quickly start outpacing that. Meanwhile, as you're paying down your mortgage every single month, guess what's happening? You're building up more and more equity along with market appreciation on your new home. So now these are really good things for you. Whereas when you rent, all you're doing is you're flushing that money down the toilet, so to speak, because you're never going to see that money again. But when you buy a home, you're going to see it again when it comes time to sell your home, okay? So the fourth myth is that buying a home is always a great investment. Okay, so here's the thing, and this might seem pretty interesting to you as coming from a trusted real estate advisor, right? Buying a home is not always a great investment. Typically, real estate will appreciate over time. And over the 100-year cycle that much smarter people that are economists and stuff than I am about such matters come up with all these fancy smancy charts and figure out what the average increase of market appreciation is on a home, and they say that it's normally 3% over the last 100 years. So this is good news. So if that's 3% on average, that definitely means that going forward, you're definitely going to be gaining equity in your home, and it's going to be a safe investment. But to think that it's going to be a great investment in terms that in 1 to 2 years, you're going to make so much equity, your home's going to increase in so much value that you're just going to be like raking in the money. It's not the case. Sometimes that does happen for people, but most of the time it's not a practical thing. Normally you need to plan on being in a home for a period of time, number of years, like at least 5 to 7 years. Now, whenever I work with first-time home buyers here in Las Vegas, Nevada, they say, Andrew, okay, you know, we're going into this logically clear-headed. This is going to be our first home. It's not our forever home. We're going to want to buy another house in a few years. How long should we wait? I normally advise them to wait 3 to 5 years in between purchasing a home, then turning around and selling it. And the reason being is this: to make sure that they have enough home equity and they've paid down their mortgage enough to cover the cost to sell the property and have additional equity to assist them with purchasing the new home. In fact, I'm working with clients right now that purchased homes with me 3-4 years ago that are now saying, okay, Andrew, it's time to sell and ready to move on to our second home that could end up being our forever home. But nonetheless, we're ready to move. So guess what? They have that equity in hand and they're ready to go, and everything's working out great for them, and I couldn't be happier for them. So just keep that in mind as you go forward with real estate, being realistic about your expectations of whether it's a great investment or not. And here's the thing, I'll end this fourth point with this. Over time, real estate appreciates. This is what's known. So as it appreciates over time, the longer you're in that property, the more equity you're going to get. Okay. So the fifth thing is that the fifth myth is that everything that you want, you can get everything that you want in your first home. So here's the issue. If you have a budget, and we all have them, right? When you go see a local loan officer, they're going to say, okay, thank you for submitting your last 2 years tax returns, W-2s, 2 months bank statements, a list of your asset accounts, and we've reviewed your credit. Here's the thing, you're approved for $325,000. Well, if in your marketplace, the average sales price is $325,000, you're probably not going to end up with your dream home in your first home. So it's important to have a very clear understanding of that and getting into the homeownership game sooner than later for the main reason that we were making in myth number 3 here about renting versus buying. Over time, you're going to be building up equity as you pay down that mortgage, and as the market appreciates, it's going to put you in a far superior position than just renting and flushing the money down the toilet. So whenever we start talking about what are you going to be able to get in your first home, you're going to need to write down a list. And it's always smart to write down this list before you look at a single home. Go ahead, write down your wish list. Write down everything that you want in a house, and then start seeing what homes that match your wish list cost. They might just outgrow your budget. And so it's important to figure out the top 3 to 4 things on your list that are the most important to you and be firm on those. You know, if you need to have a 3-bedroom house, don't compromise for a 2, because if you need 3, you need 3, right? You might have kids, you might have babies, you might be planning on having babies, and you might need the space. So don't compromise on that. You might want to compromise on location or something else that can get you into a home that is a 3-bedroom with a mindset that here in 3 to 5 years, you might be selling that house and go on to the one that you really do want and the one that you really do like. You're going to be thanking yourself, your future self is going to be thanking you 3 to 5 years from now when you do that and you have the equity on hand to be able to purchase your new home. Okay. So the 6th thing is that you should buy as much home as you can qualify for, get approved for by a mortgage loan officer. Don't do that. I'm not a proponent of that. Again, this is probably another one of those things that coming from a trusted real estate advisor, you're thinking, well, what do you mean that you don't want me to purchase as much home as I can buy? Well, it's really up to you. It's not up to me. If you get approved for $500,000 and you can find what you want at $400,000, why would you spend $500,000 just because you could? Because if you're tapping out your financial pre-approval amount, that might mean that you're going up to 50% of your total monthly income just on a mortgage. And if you're doing that, you're going to be house broke and house poor, and that's the last thing I want for any of you out there watching this video today or any of the clients that I work with here in Las Vegas. Ultimately, it's your decision, it's your call. All I can do is make these videos and share my insights with you, and what you decide to do at the end of the day is very much on you, and we'll make sure that if that's what you want, then that's what we do. But at the end of the day, it's far more prudent to take a step back, review the situation with a clear mind, and say, okay, if we're approved for $500,000 and in our marketplace the average sales price is $325,000, then we might be able to find something that we want between $325,000 and $425,000. That'll help your overall monthly budget and help you increase the cash on hand that you have for maintaining your home and your future investments, and also just keeping you in a much more comfortable position. It's something to think about, it's something to consider. If that's your situation where you can get approved for far more than you need, then really review what it is that you want in your home, because you're going to be out there home shopping in a position better than most. So make sure that you make a smart decision there, okay? So the seventh myth is that you need to have a 20% down payment to buy a house. That's just not the case. You don't need to have a 20% down mortgage. There are loans, like a conventional loan, you can get one for 3% down. There's FHA loans that you can get for 3.5% down. VA and USDA are no money down home loans. And then there's home as possible loans. There's down payment assistance loans. And with those type of loan products, you might have no down payment depending on the loan program that you're able to qualify and get approved for. So there's a lot of different options to purchasing a home out there to make your dream of home ownership a reality. So it's important to know what your options are. And the way that you start discovering these options, in addition to watching a great video like this, is actually getting a top trusted real estate advisor in your area to start having this conversation with you. They introduce you to a top local loan officer. Go ahead and submit your documentation to them that they request, so they can let you know, hey, based upon the information you shared, here's the options that you can go for. You can do conventional, you can do an FHA. Of these varieties, these other programs are available to you. What's best for you? What do you want to do? Here's the pros and cons of each, and tell me what you want to do and what works best for you, right? So the eighth myth is that having hard credit inquiries whenever you're applying for a loan is a bad thing. So here's the thing. Hard credit pulls absolutely will lower your credit score whenever you're applying for a loan. But if you have multiple hard inquiries for the same type of application, being a mortgage application, the hit to your score is only going to happen once whenever you buy your new home within 45 days of all those credit pulls. Oftentimes people are pulling their credit with multiple loan officers because they're shopping rate. There's a lot more important things to your home mortgage than shopping rate, and this is just the truth of the matter. You need to know what goes into that rate. Don't believe every teaser rate that you see out there. Make sure that you read the fine print. Make sure that you're reading all that fine print that you can't see, that you got to hit Control Zoom on just to be able to read it, because you might just find yourself getting quoted the lowest possible rate based upon a 20% down mortgage, and assuming that you're buying 2 points on your mortgage, and then you're probably not going to be such a happy camper, and yet you just let them pull your credit. So make sure that you're getting introduced to a top local loan officer to be able to assist you, and you discover all of your options so that you can make the best decision possible for your circumstances. The ninth myth is that you should pay off all of your debt before buying a home. Now, paying off all of your debt before buying a home might seem like a great idea, but it can also cause you some drama that would be unforeseen. Let's take, for instance, that if you have a credit score and you're working on improving your credit score, and maybe it's like a 620 and you're trying to get your credit score to like a 640 or above to purchase a home so you can qualify for better loan programs, right? Let's say that you paid off all of your credit cards, okay? What happens? Well, you're gonna get a little uptick, and it's not gonna be probably as much as you think, unfortunately, or as much as we would love it to be as the people that are trying to be responsible with their credit, right? At the same time, what happens is when you do that, you're no longer making monthly consistent payments on a debt. So it can actually hurt you in the long run, or even in the short term, once you extinguish those accounts. The best way to know the right course of action to take with your debts, whether they're student loan debts, whether they're credit card debts, car notes, what have you, any kind of debts, is to actually talk with your top local loan officer and ask them to advise you what do they think you should do about your debts. Should you pay them off? Should you leave them be? Should you just pay them down to an under 30% revolving balance? Talk to your mortgage advisor. That's what they're there for, is to assist you in making you successful. Now, the 10th myth is that you have to be in your current job for 2 years. That's not exactly the case for many people. Here's why. You must demonstrate that you can consistently earn the income you need to qualify, and it does require 2 years of continuous employment in your field for your field of work for salaried employees. It doesn't mean that you have to be in the same company for 2 years. It doesn't mean that you have to be in the current job for 2 years. It just means that you need to be in the same industry, so to speak, comparable positions. And if you're a salaried employee, 2 years of continuous employment will help you out there. So the difference of the point on this myth is that you have to be in the exact same job for 2 years whenever you don't. So now the only caveat to this is if you're self-employed or you earn bonus income that is tied into your mortgage pre-approval. In other words, income that you're using to qualify for your loan. If that's the case, you might need 2 years. At the same time, who's the best source of information for this? You're a trusted real estate advisor introducing you to a top local loan officer to assist you in ensuring that you know what all your options are so you can get your timetable down and begin forming your game plan and your timing when it's right for you. Ultimately, when is the time right for you to buy a home is when you're ready, you're comfortable, and you're confident with doing so. When you're ready to buy a home, that's the time that you buy. Whenever it feels right, that's what it is, because if it feels right, it normally is right. Okay, so I'm going to go ahead and pop up my contact information right now. If you need help finding a top agent where you live, or if you simply want to drop me a line and say hello, please let me know. Always love to hear from you. Now, tell me which one of these 10 points did you get the most value from today in this video? What was the most shocking one to you? Was it now is not a good time to buy? Or was it maybe that you might get some tax savings, but not the huge tax savings that you were thinking about? Or was it that it's cheaper to rent a home than owning a home? That fallacy as well. Tell us which one of these 10 myths really popped out in your mind's eye and what you got out of this video. Okay, so in between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Looking forward to coming back to you soon, team. Enjoy a great day.